All right, we're back. What's going on, chat? Sorry for the wait, but welcome back to the AppliedMMT Live.
Hello, everybody.
We are trying something a little bit new, and already I can tell that there is potential echo on Adam's part. That's my fault. So bear with us as we try a few new things here. We're gonna do a dual stream tonight, a multicast on both YouTube and on Twitter. Try and expand the reach here, so bear with us out of the gate. But chat, welcome. Adam, how's it going, man?
It is going well, Douglas. And hello, everybody in the chat. Good to see everybody again. Thanks for joining.
Yes. Chat, let me know. Is Adam? Is he echoing for you guys? Let me know, and that would be very helpful. We have some early people in the chat here. Gavin, Ghost on the Half Shell. Okay. Oh, yes, he is. All right. Django Geek, thanks for dropping in. Ozzy, good to see you. Larry Summers, always glad to have you join the stream. I'm going to try and figure out why he's echoing. I'm going to maybe mute there and see if that does it. I don't think it, just don't think it will. I don't know why Adam is streaming. Why he is echoing, because I have all the other audio off. Adam, can you give it a go? Can you say? All right, now I just muted you, and you're not. That's all right. Now you should be good. All right, guys, we'll figure this out. Fun's to work out the technical issues with that echo. Thank you, Ty, for the super chat here. I would say normally Adam kind of take it away for a little while, but that ain't gonna cut it. So God, this is we should have maybe only made one change, and maybe do the dual stream, and then we're using a different software to do the video as well, and so maybe we should have only done one there. But I might have to kill the Twitter chat. That might be what I need to do to go ahead and fix this. Anyway, welcome tonight, guys. We have a ton to go over. I know the one thing that we all want to cover is Per Byland. So we will get to that tweet tonight. We'll talk Austrian and MMT. We're also going to try a few new things on the stream as well. It is hard to come up every week with ideas to, kind of teaching ideas, and I think it might be well served to also maybe just directly engage with other content that's out there, other ideas that are out there in real time, and I think that might be something that's helpful. Is like someone that's trying to learn, and just to see people who've been around the macro world for a while and how to interpret what people are saying in that kind of MMT framework. I know that was really helpful early on in my own growth, and there wasn't a lot about it, or a lot of that. So we will be doing that. I did, Ghost in the Half Shell, I did do a dry run. We had everything working last night, which is why I'm a little stumped as to why we're having issues here, because everything is muted. I think where I want to start tonight, and I think just where I'm going to go ahead and move to, is and Adam, go ahead, and we'll see if you echo next time you talk.
Is that better?
That is better. That is much
Okay.
better.
So I think what was happening is I had the sound coming through my AirPod, and I think the mic from the AirPod probably didn't get disabled. So I have your sound coming through my speakers.
All right, sounds good, guys. Let me know how you sound. What's the other problem with this software is that it compresses what we're seeing with each other to make sure the bandwidth is open up for what what everyone else is. So let me know the feedback if this is a better solution or not, if we need to go back to the other solution. There's a lot of benefits on my end, is the person kind of producing it and running it real time. All right, let's go ahead and get into things. I think up on the screen right now is, we do have the economic calendar. Where I just wanted to start is with economic calendar. What came out today? We had GDP dropping today, hotter than expected. Once again, we continue on the tear of the better than expected. And I did hear that glitch out. Okay, I'm glad that glitched out for you guys as well, so there's not a disconnect. But hotter than expected GDP, no real surprise, and I think they even revised like the last quarter up. Maybe I saw that, maybe I'm wrong, but we continue to see some much hotter than expected data tomorrow. Of course, markets are closed tomorrow. It didn't dawn on me until yesterday, or until later in the afternoon today, that tomorrow is Good Friday. So markets are closed, and maybe that does explain what was a very kind of low volume, low volatility sort of day. In fact, this entire week has been pretty sideways, pretty muted, but markets are closed tomorrow. But tomorrow we will be seeing the core PCE drop, and that's a big one. It's important for the Fed as well, and then we'll have Powell speaking tomorrow. So, yeah, I did our weekly update for AppliedMMT earlier today, and it's really just been steady as she goes. I almost want something to come up that can change how the current pattern's going, because not that it's boring to talk about, but it's kind of been the same story for 4 or 5 months now of just very strong flows in an overall bullish market, and continue to get these better than expected results. So, Adam, I don't know, man, what's new with you?
Well, we're having David Andelfato on the podcast tomorrow, which I'm looking forward to. I think I tweeted maybe a few weeks back now, who would you like to see on the podcast? And a few people actually suggested David. For those of you that aren't familiar with him, he previously worked at the Fed, and he's now a professor at University of Miami, I believe the business school. And he's MMT friendly. I think he has disagreements with MMT. So eager to talk to him, see where he disagrees with MMT. There's actually an article that I think we're going to go through later in the stream. It's a conversation between David and Eric Temoyne, who's an MMTer. Does a lot of great work on the more technical accounting side. Where they discuss kind of their differences between what he calls standard monetary theory and MMT. So excited for that tomorrow. And maybe we'll go through it later tonight if there's an interest in doing that.
Yeah, I'm interested in doing it. So
cool.
we'll give it a shot. Anyone watching on Twitter, man, if you can drop a line in chat, I'm curious if anything's showing up. It's saying we've got 40 viewers on Twitter. So, God only knows what sort of shenanigans are played with numbers on Twitter in terms of inflating numbers. But all right, where do we want to turn now? What I want to do. So yesterday. Actually, before we do that, let me do this. Actually, I'm gonna switch back to chat here. What do we got? We had a really good question here from Connor in terms of what caused the slowdown, and I'm noticing it's not actually coming up on stream. I apologize about that, but I'll fix that as we talk this through. The question was, last week I talked about the flows, the credit cycle, and what caused it to top in late 2021 and ultimately bring the down run into 2022. Very good question, very astute question. There is just an underlying dynamic at play where the credit cycle is just cyclical. It booms and busts by its very own nature, and it's constantly cycling up and down, up and down, up and down. There were a few things that occur at that time as well to make it such kind of a devastating event, at least in the equity space. But the main cause of the credit cycle stopping is the fact that it needs to continue to accelerate over time. That is the most important thing to kind of think through. or the most important aspect to understand is that it always needs to continue to accelerate. So what I mean by that is not just increase its velocity, but actually increase its velocity each time step at a faster rate, right? So it needs to continue to accelerate. And once that acceleration falls off, and it's a how do I put this? It's impossible for something to continue to accelerate into infinity, right? So there's a natural boundary that we don't know, but I mean it's just part of the overall cyclicality and dynamics of the system. But eventually, it will run out, and it's, I don't know, peak to trough is maybe 2 years, and the entire cycle might be about 4 years, give or take. And obviously, there are a ton of variables that can offset that. Yeah, but velocity would be the right way to put that, or acceleration. I mean, whatever, however you want to define it. I think what I'm trying to define is the second derivative needs to continue to increase. Yeah, if it's not accelerating, if it's not growing, it will eventually roll over and shrink. Yeah, I mean that's really what it boils down to, Django Geek, and so it will contract and collapse, and it does so kind of on its own weight. Steve Keen, I have been on it. Speaking of which, I've been on a huge Steve Keen kick as of late, and Steve Keen is the guy that I got this all from. So between him, Ty Keen's, those are the two sources that you want to go check out. Speaking of Steve Keen, take me a little off track here. I'm going to be on the Steve Keen and Friends show this Sunday, so make sure and check that out, and hopefully I can pick Steve Keen's brain in real time, and get some of that going. But it'll be a great discussion. Yeah, the Minsky software is great to look at, and Steve Keen does a great job kind of demonstrating the endogenous cycle. Now, one of the interesting things about this endogenous cycle, I think I pointed this out during the last stream, maybe it was 2 weeks ago now. But one of the interesting things is there was generally speaking, how I think this happens is I think the Fed raises interest rates, okay, and I think the Fed raises interest rates, and I think it's the raise of the interest rates that actually kicks off the cycle, the endogenous bank credit creation cycle. And the reason I think this is a couple things, but above all else, it's that additional interest income to the private sector, and it's particularly kind of that direct capital injection to banks as well. One, via their bond holding, just getting more interest, and then two, now is interest on reserves. There's this kind of push into, it goes directly into the capital structure to kind of recapitalize banks. Essentially, what it does is it allows the banks to kind of start to take on more risk, right? So I mean, if you understand the Minsky psychological or kind of the psychology of the Minsky cycle, you go from very conservative to less conservative investment on the from banks with this endogenous creation to risky to it's kind of this Ponzi style expansion. And what kicks off that movement is this higher interest rate, and more importantly, the extra income to the private sector. This extra income does two things too. One, it's just income, and that's like the most important thing for banks to determine loans. They look at your income, whether it's revenue for a business or it's an individual for income. That's their determining factor. Do you got the money to pay it back? It's not reserves. It's not anything like that. It's income, and then it's their capital structure. And so, higher interest rates or just government spending in general kind of buffets that entire cycle, and it kicks the cycle off. And what you'll notice is that in 2020, when we had the massive government stimulus, right, that is really what kicked off the credit cycle, on top of the fact that everyone had to just be pulling on their credit lines at that point as well. But you had this massive credit cycle kickoff, and it lasted about 2 years. And that seems to be 18 months, 2 years. That seems to be the natural cycle. You have government contraction in terms of spending in April, and then you just get a very bearish outcome come 2022. So I think that's the reason. That was a really good question, Connor, and I hope that answered it. Adam, I don't know if you have any other thoughts. If you do, while you do, I'm going to try and fix the overlay here. So fire away, man.
Yeah, I would say Riddick's thinking, and I believe Riddick is in the Twitter chat. Actually, I saw him. Riddick's thinking on this I found to be very informative because I hadn't really heard anyone frame it the way Riddick had. So if you have not listened to our conversation with Riddick, highly recommend that. And also check out Riddick's Substack and Twitter. It's RP Goyle. He's in the Twitter chat if you're on Twitter.
Nice. Yeah, his video was. I had always kind of thought that I naively just kind of bit the line that there still would be this hesitation from banks in a higher interest rate environment to create loans. But I knew about the interest income. I kind of understood the MMT side of it, but right. I wasn't bold enough to really to go with my instinct that maybe even banks like higher interest rates from a standpoint of a willingness to extend credit because right. of it. And Riddick really, he set me straight on that one, and I'm forever indebted to Riddick on that. All right, we're gonna see if we can get this rolling real quick. All right, what's next? I am seeing some chat show up on Twitter. Nice. Riddick, thanks for popping in chat over there. Ty as well. Thanks for jumping in chat. Riddick saying, Doug, not seeing your question here, but streamer well. Okay. Yeah, I'm fixing the question thing. Adam, do you have any other thoughts while I maybe get this question thing taken care of one last time here?
Let me think. Well, I'm excited for the Steve Keenan Friends. Does Ty run Steve Keenan Friends?
Yeah, I don't know. Ty. I don't know if Ty is still the guy that's behind the scenes. Maybe he can jump in. Yeah, it should be a good conversation.
Yeah, that'll be great. And I'm pretty eager to get more into Steve Keen myself. Doug and I have been talking about this, but I've obviously been interested in MMT for, I don't know, 8 years now. 7-8 years, something like that. And I actually own 2 of Steve Keen's books, but I have not read them yet, and I haven't watched much of his stuff on YouTube either. So eager to dive into that side of things for sure.
Nice. All right, we got the overlay working again, so we're good to go. It's game time. Time to shit on Pear. All right. I mean that in the most loving way. I would expect nothing less from him coming my way. And honestly, chat guys, here's the truth of the matter. I had to chat GPT a little bit of. It's been a while since I've done philosophy. Let's just put it that way. I think it's been 20 years since I had a philosophy class. Maybe a little bit less. And Pear was talking philosophy here, and maybe you guys can try and help me understand, because this is something I don't think I ever got into this when I was an Austrian in terms of what do they call that, like human action or something, where they really get into the deep philosophy of how you build economics. And Pear's tweet, economic laws are not derived from empirical data. They help us understand empirical data. And I thought, I thought I understood what he was getting at. And he confirmed that in the comments or the replies. No, economic laws are a priori truths. Natural science laws are empirical statistical approximations. And again, what I had to make sure that I was understanding him correctly. That I mean, essentially, what he's saying is that economics is just first and foremost an a priori kind of like math equation that you gotta crack at first, and then you can interpret any empirical data. And in all honesty, I haven't thought that deeply about this. And again, chat, you guys can inform me on your thoughts. But that seems bonkers, and maybe if you are an Austrian in here, maybe you can help me understand this. But what role does empirical observations or empirical evidence play? And when would you know that you are wrong? Would it? I mean, is the only way that I could prove the Austrian foundation wrong by bringing a syllogism to play here? I don't know, Adam. I don't know if you have any thoughts on this, but I
I'm not super well versed in the Austrian side. I just get, there's a bad taste in my mouth whenever I see what these guys are writing because it seems so quasi-religious and not, unwilling to question kind of the core tenets of Austrian economics. Um, so I'm kind of confused by this point that he's making. I would love to hear from an Austrian if we do have any in the chat.
actually do think I'm going to have to Adam is too generous. Adam's a good guy, man. Uh, uh, yeah, I'll have to reach out to Bob because obviously it was easy to take a punch at Pear here. Because I think that's the thing is I think that's the thing is I am so driven by the evidence and maybe to a fault, right? Um, and I just don't see how if I'm I don't know if I'm calling for something to occur for 30, 40 years, right? And it just is never going my way. Um, how long can I really say that everyone else is just wrong, right? And eventually I'll be proven right. I don't know. Um, but he continued to double down on this whole idea. I think I got in his head a little bit because he said this part doesn't matter so much. But it sets the context. If you read a book that popularizes an idea that jives with you, and you have then you have certainly acquired more knowledge about the subject matter than any other person who had studied it in detail. So it's only right, nay duty, to be arrogant and condescending about it. Am I condescending? And then don't let that get to you, Pear. I usually don't. It's quite saddening, however, that there are so many people who suffer so badly from Dunning-Kruger and aren't wise enough to put a sock in it. And I think that was a direct shot towards me. Um, so I got a good kick out of that.
This is Twitter at its best, isn't it?
It really is. I was very excited. I've been trying to get my voice back, been under the weather this week, and trying to get to sleep at a decent time. And I tweet that out, and I'm like waiting for my dopamine rush to see what comes back, because it was God, I'm addicted to Twitter.
Are he and Bob friendly?
Yeah.
Okay.
Yeah.
Okay.
On this point, I think your economics has to be empirical. Maybe I'm wrong in this, but it just seems like there has to be kind of a pragmatic empirical approach to economics. Otherwise, I don't get. And maybe that's especially maybe from an Austrian standpoint. This would just follow. But you can never make a policy then if there's nothing to test, right? It just you would never. I mean, maybe they would say you could make a policy, but it just seems like even from an economist standpoint, you'd want to take an empirical approach. The other question I would have too is directly to an Austrian is, okay, so we're building these deep learning models, we're building these various tools that seem to be demonstrating an ability to truly learn from the data, right? And they're built on an empirical approach, right? We're baking in certain empirical observations to these models, and these models are able to learn based on that. If it was pure, kind of mathematic a priori, you just set the rhetoric and logic and let it go. How could you, like, what do you say then to a kind of a worldview or a set of tools that are consistently predictable? Like what, and it does. I mean, Adam, like you were just saying, I mean, it feels kind of like the whole Galileo, Copernicus situation where the empiricists are coming around with observations that clearly contradict the rhetorical assumptions being made,
Right.
undermining those, what gives at that point, I guess. So, I don't know.
Yeah, I would be curious to know because to me, it does seem like this pair guy is very hostile to MMT. I know Bob Murphy is less hostile, and he's open to conversations. You guys have had conversations, and he seems like willing to accept that he was wrong about certain things. I don't know. It does seem to me that Austrians are always just predicting this inevitable crash and blah blah blah, and I don't know what it would take to get them to question their priors, but it seems like that's what they're all about is their priors. So I don't know.
The unquestionable priors. All right, those are my thoughts on the pair. Byland, is that how you say his last name? Yeah. Incident. I really just I'm an empiricist at core, I guess, at least when it comes to economics. Doug, read the Mason Gaffney paper. It explains why Austrians are that way. I'll give it a read, man. I'll give it a I will see if Mason Gaffney has anything on YouTube that summarizes it, and I'll give it a listen. if not, then I'll shove whatever I need to in ChatGPT to summarize. But
I just Googled Mason Gaffney. I've never heard the name before.
Okay.
He's a Georgist economist, so this is interesting because I've actually taught. So I live in New York, and there's it's called the Henry George School of Social Science. And obviously, they teach Georgist economics, and some of their members have been asking questions about MMT. So I've taught 2 classes there actually now on MMT with a friend of ours named Jim. What is the paper? Doug, do you know what the
paper
what
name
Chad
was?
is referring to?
No, he never dropped the name of the paper. Zero shot. If you can drop that. If you can drop the name of the paper, we'll look it up. Django Geek Murphy is pretty open-minded for an Austrian. He is. I've always appreciated his willingness to be open-minded, and I feel like there's a potential convert down the line with Bob Murphy. Gavin, this is a good point here. I think that the commodity-based money view derived from the philosophical hypothesis that human nature are entirely self-interested. Yeah, I know that's kind of part of their. It's been so long since I've been in that space. I'll have to do some catching up. Maybe Bob can get me on the up and up. Let's see. Let's do this. Let's change gears. And also, I just got some shout outs. Derek saying hi in the chat. Thanks for dropping in. I appreciate it. If I missed you in chat and you want a shout out, just say hi. Aurora Nora, been a while, man. Thanks for dropping in. We're going to do this. We're going to pull up the discussion of David Andolfata. Is that how you say his name?
Yes, I believe so.
We're going to pull up that discussion, and we're going to go ahead and go over this. We're going to try something new, just in general, to kind of engage in some sort of content here. Set the stage, Adam. We have him on our podcast tomorrow.
Yes.
We have him on our podcast tomorrow, and he specifically laid out this is like a reasonable critique that he's offered of kind of MMT, and thought it'd be fun to kind of break this down. Adam, is there a spot you want me to jump directly to?
Yeah, I would just preface it, and so this is a conversation between him and Eric Timoin, who I feel like is a lesser known MMT academic. forget. I think he's at a school in Oregon. But he is. I always enjoyed the stuff that he writes. He is extremely. He gets extremely technical and into the weeds of like the accounting and the operations, which I find helpful. So this is just a back and forth that he and Andolfato had. There's not a particular point. I think we can probably just take it from the top if you want, Doug.
All right, so David starts off. Eric, let's start off with an opening paragraph. One of the main contributions of MMT has been to explain why monetarily sovereign governments have flexible policy space. Not only can they issue their own currency, et cetera, but also are imposed. But also any self-imposed constraints on budgetary operations can be easily bypassed. I'm curious to know what the contribution is here relative to standard monetary theory, that government can also issue its own currency, that there's this degree of flexibility is already accounted for. As for self-imposed constraints on budgetary operations, SMT takes several approaches to this depending on the purpose of analysis. One approach is to take these constraints as given and then study their implications, but it's also common to consolidate the central bank, treasury, and government into a single authority, which implies no self-imposed constraints on budgetary operations. Perhaps this is what is meant by MMT, perhaps what is meant is that MMT shows how existing self-imposed constraints on budgetary operations can be bypassed in reality. All right, Eric saying yes, consolidation is not unique to MMT, as we have said repeatedly. Not only is it used quite commonly in the economic literature, but also it's a common rhetorical tool in economic discourse, etc. Right. So everyone understands this. At least they should. It's perfectly consistent with standard monetary theory.
Doug, I just want to pause there.
Yeah.
For anyone that might not be as in the weeds in MMT, what they're talking about here is MMT basically just considers the Treasury, so the U.S. Treasury and the Fed, as the government, right? That's what they're talking about when they say consolidated view of government finance. And they recognize that they're separate entities, but they work together to conduct fiscal and monetary policy. That's what Tamoyan's referring to when he says consolidated view.
Perfect. So Eric continues on that most economists, politicians, and public don't understand the implications of this. They will interpret that the above saying is obvious the government create money, but it's not a normal way to proceed in its inflationary. MMT just pushes consolidation to its logical conclusion and shows that institutional details do back those conclusions. In a consolidated framework, the federal government can only implement spending by creating money. This is not abnormal, and it is not inflationary by itself. There's no other way to find the necessary dollars to spend. Here's the consolidation. Yeah, that's a good point. For the federal government, taxes destroy the currency, and claims on non-federal sector falls. An alternative offsetting operation is the net worth of the government rises. When the U.S. spends, it credits accounts. Similarly, bond issuance does not lead to a gain of any assets for the government. All it does is replace non-interest earning government liabilities with an interest earning government liability. David coming back, I'm not going to argue against your accounting. As for bond issuance and standard monetary theory, an open market operation is modeled as a swap of zero interest reserves for interest-bearing treasuries. The interest on treasuries explained by their relative illiquidity. The economic consequence of such a swap depends on a host of factors, which I'm sure you're familiar with. Okay, this is definitely a place where I think we want to set for a second. Do you have any thoughts? And then I'll give mine.
Why don't you kick us off?
Okay. This is actually one of the questions that I think that I want to ask him is in my kind of worldview here, there is the interest rate on the Treasury is always set by the Fed. Let me step back. The Fed is the monopoly price setter of the interest rate. Certainly, everyone agrees, obviously, that the Fed funds, you're not going to get much pushback there. But I would argue that if the Fed were to say tomorrow, hey, we're doing a 0% interest policy, and that's going to be our policy forever, Nothing's going to make us change our mind on that, and we're teaching that in school now, that's the way to go, and so institutionally that's just the agreed upon thing, right? If something like that were to happen, we would see the entire yield curve drop to zero across the board, because and I see this even play out in the statistics research that I've done, the empirical research that I've done on the yield curve, is you do see that the Fed funds has a forecastability to it, a forecastability element to it for further down the yield curve. In other words, the yield curve always just follows the Fed funds. And the reason that it follows the Fed funds is because the yield curve is just a projection, effectively, of what the market participants think the Fed is going to do at that point in time. Over any short amount of time, there might be various functions at play, other parts of inputs at play that might shift things around a little bit. But for the most part, the entire yield curve is just what agents in the market are doing to guess where the Fed is going to be at that moment in time. I don't know if you had any thoughts on that, Adam.
Yeah, I wonder. I'm curious. So scroll up a little bit, Doug. So when he says, "I'm not going to argue against your counting as for bond issuance in SMT, in open market operations models, a swap of zero interest reserves for interest-bearing securities. The interest on treasuries is explained by the relative illiquidity." So I'm wondering how he would explain, like, how SMT, quote unquote, would explain Japan, for example, where interest rates were negative. Like, what is his thinking?
Yeah.
Right. Like, what is the thinking there?
That's a good question.
Yeah, I'm excited to talk to him. We can keep running through it. I think there was a point I wanted to call out in here, specifically regarding inflation, when Andolfato kind of assumes that spending is inflationary, and Tamoyne has to correct him and say that spending is not necessarily inflationary. And I thought that was a highlight for me, kind of this assumption in standard monetary theory, which I think this is the only place I've really seen it referred to as, is that the assumption that government spending, additional government spending, will be inflationary. And to me, that is a huge difference between MMT and what Andolfato's arguing here.
Yes. Yeah. Give me 1 second here, guys. And Gail's the balloons just came up. All right, next paragraph here. Sure, in addition to self-imposed finance constraint, to debt ceiling, no direct financing by the Fed, no monetary power for Treasury have been put in place at various times with argument that they impose discipline in public finance. MMT argues that financial constraints are not necessary and are bypassed routinely. Sure, the standard view is that these self-imposed constraints are designated to impose discipline in public finance. The proposition that that these financial constraints are not only necessary, however, must be based on a set of assumptions that may or may not be satisfied in reality. The fact that these constraints may be bypassed through the central bank coordination does not seem relative to me. The conflict emphasized by SMT is between independent central bank and legislative authority, example, the Fed, Congress, and not the Fed and Treasury. I'm not sure why a new theory is needed here. We know, for example, that if a legislative branch of government fully trusts itself and to behave in a fiscally responsible manner, the notion of independent central bank and other self-imposed constraints makes little sense. Eric, coming back, remember that MMT emphasizes the irrelevance of financial nominal constraints for monetary sovereignty. bond vigilantes, risk of insolvency or of Social Security, etc. One can do that by using consolidated government. Taxes don't finance, bonds don't finance, etc. Or by using unconsolidated government. The central bank helps the Treasury helps the central bank. The second method conforms to the actual federal government operation, but is much less easy to use rhetorically, and it waters down the core point. Government finances are never a financial issue. Given that point, as you note, financial constraints are not only irrelevant, but also disruptive and used for political games. MMT wants to make the government financial operations as smooth and flexible as possible once society has decided how and to what degree the government should be involved in solving socioeconomic problems. Finding the money should not be an issue when monetary sovereignty prevails. This means demystifying, et cetera, et cetera. This view is expressed. I want to see. Sorry, guys, I'm going to jump down. I get the thrust that Eric's saying here. I think it's fair to say most people want to see the government operations run smoothly and would be welcome to a sober debate over the issues at hand without any fear-mongering that some would like to promote. The broad objective seems the same. The debate is more over implementation, how monetary and fiscal policy is coordinated. Having said this, I think you go too far by asserting the government. Oh, here we go. Here's the good stuff that everyone's been waiting for. Having said this, I think you go too far by asserting that government finances are never an issue as long as monetary sovereignty applies. Of course, technical defaults on nominal debt is not an issue, but SMT also recognizes the importance of economic default on nominal debt. Did I read that right? But SMT also recognizes the importance of economic default on nominal debt. True, a government can always print money to satisfy its nominal debt obligations, but if money printing dilutes the purchasing power of money, it is de facto default. All right. Adam, can you give your thoughts first, man?
Yeah, and this is kind of this is similar to the point he makes this point elsewhere in the post. Where he makes the argument that, quote unquote, printing money inherently devalues the currency, right? And I think that to me is one of the big disconnects that I identified. And I think that is, an assumption in mainstream economics and also in just, conventional wisdom and common sense and how people think about this stuff. There's this assumption that like creating currency just devalues the money immediately, like upon creation, right? And I think that's a big error in this piece and more broadly.
Yeah, I'm in agreement. I'd be interested, but if money printing dilutes the purchasing power of money, this is a de facto default. Listen, I don't know if what I'm about to spot off here is like MMT approved or anything like that, but okay, let me back up. If also real quick, chat, if you have a specific question, type question in your question if you would like me to address it. If you guys are just talking amongst yourself, that's great. But if you need me to see it, put question in there, and that highlights it for me, just so you guys know. Please don't abuse that. I'm trusting you, chat. I would be interested to know how he would define diluting purchasing power. Maybe he does define that a little bit down, but I mean, purchasing power. I mean, every Austrian puts that photo up. Of the purchasing power.
A wheelbarrow of money.
Is it? Well, is that what it is? Yeah. But it's like it starts in the top left and ends in the bottom right. And it's like a purchasing power over the last 100 years, and it went from 1 to 0.01 or something like that. Like, does he mean the purchasing power in real terms? I mean, is that what he means? I mean, he has to mean that in real term.
He must.
Okay. So, is it called the Gessel currency? Okay. I'm gonna back up a little bit. There was a think it was like an Austrian town or something like that during the maybe it was before the hyperinflation of the Weimar Republic. I don't know. Someone will correct me in chat. But there was a community that had a currency that actually expired. It was a time deposit that would expire, and what the thought was on the theory is that, Wargle. Yeah, I got to look this up to get it. The town of Wargle. I am not. Can you put that phonetically for me? It was a stamp script. Yeah, this is kind of interesting because they implemented this thing that the money just it had a shelf life, and if you didn't use it, you lost it. And what's interesting is they got full employment. Wurgle, yeah. They got full employment because of this, and they just had a booming economy in this town. And there's and this is one of the things that I remember way a long time ago when I was studying what Steve Keen had to say, which is there's a sense of like this velocity of money, and what I mean by velocity of money is not the way that it's kind of meant and understood in kind of a more classical sense, but I just mean the amount of time that it takes for my deposit to become your deposit. Like how many times any given dollar makes it through the circuit. The faster that velocity of money, the more the economy is growing. And it makes sense that if you have an expiration of the currency, that you're just going to be spending your money faster. And if you're spending your money faster, that's just going to increase income for the person that you're spending it to, and increase the at least measured economic outcomes from that. So the instinct to want a currency to withhold purchasing power makes sense in real terms, certainly not in nominal terms. And if anything, there should be at least again, as I see it, it helps if the policy is if the policy is generally focused on getting people to spend the unit of account for that nation as opposed to hoarding that. If there's going to be hoarding of anything, it should be hoarding of if there needs to be a hoarding of assets, it should be a hoarding via investment as opposed to just hoarding of the unit of account for whatever economy that is. I don't know if that makes sense, Adam.
No, that made sense to me. I'm can you pull up the chat, Doug? Just want to see what everyone's saying.
They were correcting my mispronunciation of Wurgle. And nothing. I mean, we did get Ty Keen's asking, what is the meaning of life, and never gets a response. I think the meaning of life, Ty, is to live. There you go, man. There's philosophy with Doug. Let's go back to the. Were there any other parts? This is a long article. We kind of planned on an hour tonight. I don't know if there are any other parts that you wanted.
Yeah, can you just go Control F and search inflation?
34 times.
Let's see here.
Do you want Eric's response, or do you want?
I think it was David. We can skip it. It's somewhere in there. Maybe we do Q&A from the chat.
Yeah, chat. If you guys got any questions, drop it in chat.
If anyone has specific questions they want us to ask David tomorrow, that'd be great if you could leave them in the chat.
I got Reed Hudson. I've listened to a lot of his stuff on YouTube. He's pretty good. I think people talking about inflation are really talking about asset price inflation. Yeah.
Is this Michael Hudson?
Must be. Yeah.
I have some issues with. I think Hudson kind of abuses MMT a little bit. for political purposes. I don't know if anyone else feels that way, but that was my take.
It's been a while. It's been a while since I've dove into some Hudson. Might have to dive back in. A question: do you have any thoughts on the euro-dollar market and how it influences demand for long-end maturity treasuries? I'm trying to. I have thoughts on the euro-dollar market, and that's like a Jeff Snyder thing, right? If I'm not mistaken, he's big on the need for treasuries as collateral. Yes. Okay. If this is kind of interesting, if you look at the tick data, which I think is, if I'm not mistaken, here is the data that tracks or where you can track what the kind of what I'll call the offshore holding of treasuries looks like, you can see a very strong correlation. You can see a very strong correlation between treasury holdings and effectively like what I'm just going to call the bank credit, the endogenous cycle. So clearly, the more treasuries they have, the more space they have to create new loans. Now, I don't think that impacts the actual price of the yield curve. I think the yield curve is again set by monopoly price setting by the Fed. But I mean, I think the government not spending the reserves into existence and then creating the bonds to go ahead and use for really what you call kind of the shadow banking system does very much impact that system. And I mean, we saw that in 2008 in spades. It was a breakdown of that very system amongst many other systems at the same time. Django, let me follow up if you had some other thoughts on that, but that's kind of where I'm at. Good question. I got Derek saying my disagreement with Endofato is mostly about portfolio theory and how discounting works in practice with limited time horizon. And
wait, Ty, you didn't know how to control F a page? That's remarkable. I don't know how you've made it on the internet this long. So Connor, I saw Connor said say more about Hudson. Yeah, so he he um he obviously is like a very left wing guy, and I think he understands MMT to a degree, but the way he describes certain operational things like QE, he kind of frames it as like, QE was a program that saved Wall Street and was printing money for wealthy people, and like that's his framing of what quantitative easing is. And I just think it's incorrect. And I think he kind of uses that framing because it fits with his politics. And I've actually run these questions by some MMT people, and they agree with me. So I understand. Like I think Hudson does a lot of good work, but I think in terms of his takes, in the MMT world, I don't think they're the most honest takes.
I forget about that. Yeah, he really does hate the banks.
Yeah.
and really, yeah. He's got some cool ideas, but I forget about kind of that aspect of it. A couple of things I wanted to hit tonight before we call it a wrap. I'm switching back to the browser view here. Federal Reserve posts record loss of 114 billion in 2023. I had a really good chat with a friend of what we're doing, and it was a nice chat with him, and he had some really really good ideas. He's been an MMTer for even longer than I have been. Really neat story that he had, and we were talking about specifically about the accounting of this. he made a really good point in that when the Federal Reserve returns money to the Treasury, right? So if the Federal Reserve would actually make a profit, that is functionally a tax, right? Because there's no difference between just taxes removing ultimately reserves out of the system, and the Fed, quote unquote, making a profit and then giving that back to the Treasury functionally. And so what got me cracking up is I keep seeing all these what I would assume to be kind of conservative right wing, at least in the economic space, people complaining about an effective tax cut in the in the amount of billions in 2023, and I know that's already continuing in 2024. So I'm glad to see the even the sound money crew complain about tax cuts for the rich here. So yeah, oh, that was kind of funny and quite a clever framing for it. This is just effectively a tax cut.
That reminds me of Doug. Google Mary Meeker, United States profit and loss.
Is it okay, Mary? Okay, is it a Forbes article?
It's a slide in a presentation.
PDF.
That I always got a kick out of. Let me see if I can. Yeah, so Google Images, Mary Meeker, USA profit loss, and it should be the second result.
This one right here.
Nope. Try searching USA instead of US or United States. Yeah, there you go.
Ah, yeah,
So
yeah.
This is funny. This was from
Mish.
Yeah, I got a kick out of this because this is how you missed it. It's up a little bit.
Did I miss it? No, there we go.
Right there. Yeah, so this is obviously just deficits and surplus, and in this presentation, it was framed as profit and loss, and she was, framed this as a big problem, which I thought was funny.
Jesus,
kind of a similar vibe to that chart you just showed.
That's hilarious, man. This is where like just empirical observation. I think it has to be a necessity. Django, make sure you if you write out question, that's actually the trigger word for it to. I saw the cue, write out question, and it'll highlight it for me in chat. I did catch your question though, so we'll get it in a second. But man, I just look at this and I'm like, some really bad things happened after 2000. Like it happened after the two shortest parts, and like in the 1970s, man, we had some struggle there. Like maybe it's not a good thing for the U.S. to be running a profit.
Yeah, I don't know why you would look at the U.S. on a P&L framework here.
This is kind of I'm laughing because it's like get effed, U.S. citizen, man. The government just beat you at your own game, man. you guys are running a loss, baby. Bill Clinton making big profits. Yeah, that's good. I like that. All right, let's see. Question follow on. If you say the endogenous money creation is limited by the amount of treasuries in the intrabank system, would it imply that the Fed is less influential on those longer bonds despite their monopoly status? No. I hope I'm answering the question you're getting at. Sorry if you guys can hear the rattle of the cough drop here. I'm I can feel the end of the voice coming. The endogenous cycle, the constraint that would be on it. By the way, this is unique to the shadow banking system, the rest of the world, however you want to put it, right? Because they do have, God, man, Ty, I need to block your comments when they're distracting and funny because they just come in and completely derail me. um, they do have kind of a constraint. It's almost like they are on like they have to go dig up the gold to be able to expand. But I don't think the Fed doesn't. I mean, the Fed's just setting the rate, and the rate is following the curve is just following where it thinks the Fed is going to set the rate at that point in time. The real limit for this Eurodollar system is the amount of treasuries being issued, and the amount of treasuries being issued is, I mean, directly based on and directly dictated by government spending. And the only way they're going to get those treasuries is if they export to the U.S., import the dollars, and then use those dollars to purchase the treasuries. So I mean that's kind of how the circuit goes, and I don't think it undermines their monopoly status. What it does undermine is their ability to directly control. Now, after the Great Financial Crisis, they stepped in and they were like, "We'll do these swaps, so we'll help you get what you need to make sure the system doesn't collapse." But I hope that answered your question. Oh, look at that, man. Ty, no, only in so much the banks will need to settle with each other with the Fedwire with reserves, but even the big banks hold accounts with each other. Yeah, good. All right. We got one more. We got time for one more question. Go for it, Adam.
I was just reading Ty's comment. Doug is like one of the NPCs of GTA Vice City, mixing his cough drops with rum and going to town. That's my boy.
Oh man, I will not do a drunk live stream. It'll be one thing I don't do. Maybe. Kind of what I'm leading up to is, aside from rates on loans and short-term bills, is the Fed's influence overstated?
Yes.
Thank you. I saved my voice for that one. You're helping me out, man.
Yes.
Mm-hmm.
Yes. I would just say, like, big time yes. Way too much focus on the Fed, not nearly enough focus on fiscal balances.
Yeah, quite ironically, the only way the Fed can really take control is by jacking rates up and giving out that sweet interest income. Fallout. I couldn't get into Fallout. Sorry, Ghost. Let's see. Speaking of gaming, since we're almost wrapping up, although we are growing viewers as I speak, so maybe I don't want to derail the chat, but they're bringing fiber into the neighborhood, and I didn't realize. Yeah, Brian Engler's, they're a higher Patreon tier with drunk live streams. That is a great idea. Absolutely. Yeah, get me at my most honest. I actually might do some Twitch stuff. I might. So we're getting fiber. I only have 40 megs up right now because I'm still on. I've got a gig down, but 40 megs up because I'm on cable. But once I get fiber and I have a gig up, I might do a triple multicast to Twitch as well, and then maybe get some gaming and monetary discussion done at the same time, because seems to be quite a few gamers in chat. So if that's something you're interested in, let me know, and we might be able to hit that up. I'm going to finish off with Derek here, unless anyone else has anything that comes on in. My only question for David would be about Chapter 17 of Keynes' General Theory. What he thinks of if money could grow, if money could be grown like a crop, if that's Keynes promoting a job guarantee. Okay. I never read General Theory, but Adam, take note. Maybe we can figure out where that's
Derek,
at.
I will note this for David, and we can ask him about it.
Oh man, cybernetics, MMT is also wrong, but less so. Good to see you back, though, man. Glad to see you back. Um, all right, chat. The game plan is we're gonna cut things here soon. The game plan is though to start streaming a little bit more. I want to get into it. I've been feeling it, and I really enjoy these streams. So we might be doing more of these streams. Let me know too. We did some read the Bible and Hudson. You'll understand mostly everything about economics. I do like Hudson's theology. He's got some good theology points. I was really impressed. With his some of his theology stuff. Larry Summers, MMT is the worst. Danger Zone. Hi all. What did I miss? You missed. Yeah, rewatch the stream. You missed me dunking on Pear for a while. You missed me reading out loud with half a voice. If you guys like that too, I mean, I've been thinking of some ways to engage and just like I said at the outset of the stream, it's kind of hard for me to like have something prepared every week. Ahead of time just for the stream, and if it would be fun for you guys to be able to engage in a stream where I'm also kind of like learning as I go along. I'm going to pick up Minsky here soon, and so if that'd be fun to watch and just instructive as well. I mean, yeah, I don't know. I mean, if there's anything that'd just be neat to that you guys would want me to be doing. Let me know. There's someone asking something in Twitter chat. Thanks. I will check that out. No problem. Regarding inflation, how to cross-check sum of sectoral inflation, overall inflation accuracy. I don't think my questions are getting seen because I don't have a blue check. No, it's not because of the blue check. I just wasn't paying attention. Sorry, godlikely. I'm trying to think. Regarding inflation, how to cross-check sum of sectoral inflation, overall inflation accurately. I don't know if I'm following the question 100%. Can you see that, Adam?
With regards to inflation, how to cross-check sum of sectoral inflation and overall inflation accurately. Not quite sure what that means. Yeah, not sure there. Sorry.
Let me if you watch this after the fact, DM me in Twitter and let me know what you were talking about, and maybe I'll reach out to you and try and figure it out. So, yeah, right on. Very successful live stream tonight. Thank you, by the way, Django, for pointing out that I had something left in Twitter chat there. All right, I'm seeing too that maybe some programming will be fun. Trying to put an MMT trading bot together. I don't know if you're saying you are. I know we are. Obviously, there's going to be some proprietary things that we'll probably keep close to the vest. But yeah, I think that might be something we could do. So, chat. It's been another exciting week, and sorry we couldn't go live Monday. But we'll probably be back. Actually, I think next Monday. I don't know if I can go live on Monday, so we might have to do like another midweek stream. But either way, thanks for showing up, chat. Always enjoy the time on your way out. Hit that like button, by the way, much appreciated. And I'm sure you're all subscribed here. I know you'd be subscribed with the notification bell on. So, Adam, unless you got anything else, man, that is all I've got for tonight. So.
I don't. Everyone, thank you. Thank you for coming by as always. And Ty, I'm glad we changed your life with Control F.
Yeah. All right. Yeah, I'll see everyone Sunday or Saturday. I'm sorry. I'll see everyone. I better get the date and time right. Saturday, noon Eastern time on Steve Keen and Friends. Look forward to it. So take care, everyone. We'll see you then. Bye-bye.
Yes.